Hello and welcome. If you are buying a home in Houston, you may have heard that flood insurance can be required as part of your mortgage approval. But how do banks determine if flood insurance is necessary, and what impact does it have on your loan? In this video, I will explain when banks require flood insurance, how to check if your property is in a high-risk flood zone, the differences between federal and private flood insurance, and what you can do to reduce costs while staying compliant. Stay until the end for important tips that could help you save money on flood insurance. Most banks and mortgage lenders follow federal guidelines when determining whether a homeowner must purchase flood insurance. The key factor is whether the property is located in a designated high-risk flood zone. If your home is in a high-risk flood zone, your mortgage lender is legally required to mandate flood insurance as a condition of your loan. If your home is in a moderate or low-risk flood zone, banks generally do not require flood insurance, but they may recommend it. If you are purchasing a home with cash, you are not legally required to buy flood insurance, but it is still a good financial protection to consider. Banks require flood insurance because they want to protect their investment. If a home is significantly damaged by flooding and the homeowner does not have insurance, the bank risks losing the value of the property that secures the loan. Before closing on a home, you should check whether the property is in a flood zone that requires mandatory insurance. Here are the best ways to do this. 1. Use the Federal Emergency Management Agency Flood Map Service. The Federal Emergency Management Agency provides an online tool where you can enter an address and see if it is in a high-risk flood zone. 2. Ask your mortgage lender. Banks have access to flood zone determinations and will let you know if insurance is required before approving the loan. 3. Check with the local government or city planning office. Some areas may have updated flood risk assessments that impact insurance requirements. 4. Consult with an insurance agent. Insurance professionals can help you assess risk levels and understand your options. Flood maps are updated periodically, and properties that were once considered low risk can be reclassified into high-risk zones. It is important to stay updated on any changes that might affect your property. If your bank requires flood insurance, you have two main options. National Flood Insurance Program. This is a government-backed flood insurance program that provides coverage for homeowners in high-risk flood zones. The National Flood Insurance Program sets standardized rates based on property location and flood risk. Private flood insurance. Some private insurance companies offer flood policies with different coverage options and pricing. Private policies can sometimes be more affordable or provide higher coverage limits than the National Flood Insurance Program. Most mortgage lenders accept both options, but some may require National Flood Insurance Program coverage if the property is in a high-risk area. Be sure to check with your lender before choosing a policy. When flood insurance is required, lenders will factor the cost into your mortgage approval. Here's what to expect. Flood insurance premiums are based on risk. Homes in high-risk areas will have higher premiums. The average flood insurance policy in Houston costs between $500 and $2,000 per year. Lenders may require escrow payments. Many banks require flood insurance premiums to be paid through an escrow account, meaning the cost is included in your monthly mortgage payment. Insurance requirements must be met before closing. If flood insurance is required, you must provide proof of coverage before the lender will finalize your mortgage. Not having the right coverage in place can delay closing on your home, so it is important to secure a policy early in the process. If you are required to purchase flood insurance, there are ways to lower your costs. Shop around for private insurance options. Some private flood insurance companies offer lower premiums than the National Flood Insurance Program. Raise your home's elevation. Homes that sit higher above the base flood elevation often qualify for lower rates. Install flood protection measures. Adding flood vents, barriers, and improved drainage can reduce your insurance risk rating. Increase your deductible. Choosing a higher deductible can lower your premium, but it means you will pay more out of pocket if you need to file a claim. If you are considering a home in a high-risk flood zone, ask the seller if they already have an active flood insurance policy. Some policies can be transferred to the new owner, potentially saving you money. Understanding flood insurance requirements before purchasing a home in Houston can help you avoid surprises and additional costs during the mortgage process. If your property is in a high-risk flood zone, your bank will require flood insurance, but you have options for coverage and ways to reduce costs. If you found this video helpful, be sure to like and subscribe for more real estate and flood protection insights. Have any questions about bank requirements or flood insurance? Leave them in the comments and I will be happy to help. Thank you for watching, and I will see you in the next video.